Good morning. This is a podcast, Ancient Rome Today. In today's episode, we'll talk about some not very pleasant things. However, these things are difficult to avoid or evade. You might have already guessed that taxes in ancient Rome would be the main argument today. First of all, it's worth saying that the taxation system changed throughout the history of ancient Rome and was obviously different during the reign period and the late imperial times. Unfortunately, there isn't much information available about the taxation system during the monarchical period. However, we know that it was King Servius Tullius who organized the census process in Rome, where surveyors assessed the property owned by each citizen. As a result of that process, people were categorized into 5 social classes based on their property. The wealthiest had to contribute a significant amount for Rome's preparation for war. Obviously, the less wealthy people contributed less. Another thing we know about the monarchic period is that various tariffs were applied when goods entered or left the city. Fortunately, there is much more information about the taxation system in the Republican period. During that era, the Roman state imposed a personal census tax in the same way it was during the monarchical period. This tax was used to support war expenses as a rule. For example, citizens belonging to the second class had to pay a sum of 100,000 asses, while those in the third class had to pay 25,000 asses, not annually, but once every 5 years. The Roman as was a bronze coin used during the Roman Republic and Empire. If you'd like to learn more about the monetary system in ancient Rome, there's a dedicated episode on this channel. Another thing inherited from the taxation system of the monarchical period was the system of duties. A percentage was paid to the state based on the value of each commodity. That percentage differed for each type of product. During the Republican period, a new indirect tax was also introduced. It was applied to those who owned slaves. When a slave was sold, 4% of the slave's value had to be paid to the state. Furthermore, slave owners had to pay a 5% annual tax based on the value of each slave. The taxation system underwent a major change when Augustus came to power. This emperor introduced 2 other treasuries that existed alongside the main one. The first one was called fiscus. It was the emperor's personal treasury containing taxes arriving from the provinces. The other treasury was exclusively dedicated to military expenses. It was used to finance wars, pay legionaries' salaries, and so on. Over the centuries, during the imperial period, many emperors attempted to introduce new types of taxes, which sometimes appeared to be quite bizarre. Perhaps the most famous was the urine tax introduced by Emperor Vespasian. It was levied on foulons, launderers, and tanners who collected urine from public latrines. Urine was rich in ammonia, so it was an essential ingredient in the bleaching and tanning processes. The other example is the Jewish tax, which was applied exclusively to Jews. Originally, it was an annual tax of 2 drachmas that Jews throughout the Roman Empire had to pay to the temple in Jerusalem. After the destruction of the temple in 70 AD, Emperor Vespasian diverted this tax to the temple of Jupiter Capitolinus in Rome. It should also be noted that conquered provinces often incurred extraordinary taxes for various projects. One of these was the industrial tax applied to areas with high industrial production. It was initially introduced in Egypt. Another example of additional taxes was the so-called capital tax. As you can see, the Roman tax system resembles many modern ones across various countries. In most cases, the tax percentage is directly connected to the amount of income. There are also many extraordinary taxes, such as the capital tax. For instance, those who own a home must also pay a percentage of its value annually to the state. This kind of tax exists in many countries around the world. We've already said a lot about the tax system, but we should also mention tax evasion. Don't think that tax evasion is a recent phenomenon, a form of protest against the ever-increasing tax rate, or a consequence of digitalization. No. Tax evasion was quite widespread in the Roman Empire. We know this for sure thanks to a 1900-year-old papyrus found in the Judean desert. That document recounts a scam carried out to avoid paying taxes in the Roman provinces of Judea and Arabia, which are now Israel and Jordan. It involved falsifying documents and the illicit sale and liberation of slaves. The two protagonists of that case were Gedalias and Saulos. They organized a fictitious sale of slaves across the border, thus making them disappear from the tax records of Judea. That way, they were not registered in the Arab province. As a result, the owners completely avoided paying taxes, 4% for the sale and 5% for the freeing of slaves. Tax evasion is not uncommon even today, in almost every country worldwide. The tax evasion schemes, however, are different from those of ancient times. But the concept remains the same. Thank you for your attention.